Hi students, welcome to the class. So now we are going to start our chapter number 2, that is basic concepts in auditing. Chapter 1 was one of the easiest chapters in your syllabus and chapter 2 is also a part of that chapter only. So in this chapter we are going to clear certain concepts, certain terminologies which I am going to use again and again in auditing. So let us start with a basic term which we generally use in audit, and that is Auditor's Independence. Now independence, when I started my lectures, I took an example in front of you. That was my second example. When you were going to a store which was your father's store and you were starting your audit, you asked for certain information from the manager and the manager said to you that you take some money from me, go to your father and tell him that everything is fine in the store. So you said that no, you will not accept that money, but what you will do is you will yourself perform audit and evaluate everything and then you will give your own opinion. Means you were working independently. That is what is required from an auditor, that he has to work independently. Independent means that you have to be free of any interest. Secondly, your decisions should not be dependent upon the wishes or directions of some other persons. So your decisions should not be dependent on directions of some other person. Right? When you are giving your opinion, it should be supported by all the evidences which you yourself have evaluated, and not that some other person is pushing you or forcing you to give a particular decision and then you are giving that decision. So, this is what we call independence. Now, independence, I can say, is a state of mind. Whether you are feeling independent or not, it is a state of mind. I cannot see and tell you that yes, you are independent or not. But yes, there are certain rules which can be framed so as to ensure your independence. And these rules have been framed in the Companies Act, like the rule how an auditor will be appointed, how he can be removed, how an auditor has to give his report, what are the rights of an auditor. These all rules have been framed so as to ensure that an auditor is working independently. Like, an auditor has been given a right, the right to qualify his report. What is the meaning of qualifying the report? Qualifying means that I asked my client that I need certain information. Can you please provide me the information for the purpose of the audit? The client said, no, I don't think it is required by you. You please go ahead with their audit without this information. Now, because as an auditor I am not comfortable, I require that information, but my client is not giving that information to me. So, will I be able to perform my audit independently? The answer is no. So as to secure my independence, Companies Act has given me a right. What is that right? That an auditor is given a full right to obtain all the information which he requires while performing audit. He can even go to the officers and employees of the company and he can himself go and acquire the information. No one can stop him, and if anybody dares to stop an auditor, to acquire any such information which is necessary for the purpose of audit, the auditor has been given a right to write it in his audit report. So auditor can specifically mention it in his audit report that I asked for this information, I was refused by the client, so I am not able to perform this particular area of audit, hence my opinion is this. So because of this right of an auditor, the client will always try to ensure that the auditor is working independently. So sometimes this question is asked in the examination that are there any rules to secure the independence of auditor? So the answer is yes, certain rules have been framed in the Companies Act, and these rules are as follows. As given in your notes, I am reading from your notes. The rules are: the Companies Act 2013 has enacted specific provisions in this regard. Now, one thing you have to remember always, that you will not write Companies Act 1956 now, make it a habit. Companies Act have been changed totally. Now it's not 1956, it's now 2013. So everywhere you are going to write it, you are writing 2013 only. So the provisions for disqualifying certain persons from undertaking audit of companies, in detail I will tell you each and every provision when we will be studying our company audit. That is your chapter number 7. So here I am just touching these provisions so as to explain you how these rules help us to secure the independence of the auditor. The first rule, provisions disqualifying certain persons from undertaking audit of companies, like if I am employee of a company, I cannot be an auditor of that particular company. Obviously, if I am employee of that company, I will not be able to work independently and I will not be able to give my audit opinion independently. So that's why certain persons have been disqualified to be appointed as the auditor of a company. Another rule is provisions on appointment, reappointment and removal of auditors. If I am an auditor of a company, I ask for certain information, my client is continuously refusing to provide me that information, then it's not the right of the directors or management of the company, they cannot remove me from the position of the auditor. It's only up to the auditor's will. Directors have not been given any right to remove the auditor of a company. So again, this rule is securing the independence of the auditor. Vast powers of access given to the auditor to the books of accounts and the documents. The reason why whenever you will go as a statutory auditor in any company or any bank, you will be given a special respect. Why? Because you have full right to access all the documents, all the vouchers, even you can obtain information from all the persons in an organization. So these rights help you to secure your independence. Then is the power to qualify his report. Okay, you will not give me any information, I will mention it in my report. So this way my independence is being secured. So this was about the auditor's independence. So another terminology which I am going to use is audit evidence. Again and again we have been using this word audit evidence. Now let us learn what audit evidence exactly is. What is audit evidence? Any information which an auditor has used for the purpose of doing audit is known as audit evidence. It can be any information, it can be either financial information, it can be either non-financial information, it can be verbal information, it can be visual information, any kind of information which an auditor has used for the purpose of doing audit and at the time of reaching to a particular audit conclusion is known as a audit evidence. How many kind of audit evidences are there? I have divided it on the basis of source. They are internal and external. Then is on the basis of nature. It's oral, written or visual, and on the basis of impact, that is persuasive and conclusive. So these are the kind of audit evidences which an auditor will get at the time of performing audit. On the basis of source, it is internal and external. So how do I explain it? Internal is any information which I get directly from my client, which originates in the organization, is an internal information. External is all those informations which originates outside the organization, like bank statements, bank certificates. All these kind of informations are external information. Then is on the basis of nature, oral. Oral is just like I am having an inquiry. I just inquired the management and management gave me some information. That is oral evidence. Written is when I ask for something to be written and given to me. It can be a letter, it can be any kind of information. Visual is when I observe a particular process which is happening. Like I asked my client, sir, how your employees are marking the attendance. My client says that we have a punching machine. Everyone who enters the organization, they punch their card and then their attendance is automatically marked in the machine. So what I did was, next day early morning I went near the main gate where the punching machine was being installed. I saw whether every employee is marking the attendance or not, whether they are punching their card or not. And yes, every employee was first punching the card, then only the gate opened. So this was the method of marking the attendance in that organization, and this was a visual evidence that yes, everything is as per the rules and regulation. Impact. As per the impact, it is persuasive and conclusive. Now what is persuasive? Any evidence which persuades you to reach to a particular conclusion is called a persuasive evidence, whereas conclusive evidence is an evidence on the basis of which only one conclusion can be reached. In audit, generally we get persuasive evidences, conclusive evidences are rarely there in audit. For example, there is one student sitting in the class. I asked other students, can you tell me about this particular boy? The one student may say he is very good, another may say he is very bad. So there were 10 students in the class. I took a vote. Most of them said that yes, he is good, he is good, he is good. 9 out of 10 said he is good. So what I will say is yes, he is good. If 9 out of 10 will say no, he is not so good, he is bad and all, what my conclusion will be? He is not a good boy. So this evidence which I got was persuasive evidence. Now if I ask you, can you tell me academically how this boy is? You will say, ma'am, can you show me his 12th class mark sheet? I asked him, in the mark sheet, he got 90, 90, 90, 90, 90. Now what you will say? You will say, yes, he is intelligent. Second person will say he is intelligent. Third will say he is intelligent. 10 out of 10 will say he is intelligent. Why? Because now the evidence which you are having is a conclusive evidence. So, persuasive evidence is an evidence which persuades a person to reach a particular conclusion. Yes, he is a good boy or he is a bad boy. Conclusive evidence is an evidence on the basis of which every person will give one conclusion, and that is he is an intelligent boy. When I am doing audit, generally the evidences which I will get are persuasive evidences. How? The invoices, sales invoices, purchase invoices, all these invoices have been made by my client. They can be fake also. They can be modified also. All the accounting policies which my client is following, all the estimates which he has made is totally dependent on his judgment. And there is no proof. If my client says that yes, my laptop useful life is for 5 years, I have to believe him. Conclusive evidence is when everything is written on a stamp paper, like loan agreement. It is a conclusive evidence. So, these are the kind of evidences which an auditor will get at the time of audit. Now, our essay 200 says, that while performing audit, auditor has to obtain sufficient and appropriate audit evidences. Sufficient and appropriate. Now, what is sufficient and what is appropriate? Sufficiency refers to the quantity of audit evidence, and appropriateness refers to the quality of audit evidence.